Welcome back to the Trading Edge, your weekly look around the markets. Today I have 8 new charts I'm going to take a look at. But before we take a look at the charts, 2 things. One, big thank you to everyone that attended the Bridging the Gap workshop over the past 2 weeks. It was an amazing experience. So great to work with such a great group of traders. 2, if you missed it, don't worry. The full recordings of the workshop will be available until August 20th. Just head over to www.tier1trading.com, register for the event, and you'll have full access to the full 2-week workshop, 100% free. All right, let's get into things. So let's kick things off the euro dollar. And if you've been anywhere near the markets this week, you know it's been a very busy week for the dollar with the CPI news coming out and the market really kind of reassessing its plan about interest rates. And previous to that announcement, we were in this period of consolidation right here, and we saw initial dollar weakness with a big breakout to the upside. However, there wasn't much of a follow-through. Price action did come to that previous level of structure resistance, right? Look left, structure leaves clues. Previous support, previous support, previous support. Once broken, turned into resistance. We did come up and touch that level and refused to break it. We put in a nice, really rejection candle right here of this bullish break. The next day was an inside bar, so a little bit of consolidation. And we ended the week with what's called a lower low, lower close bearish candle. If we go down to the 4-hour time frame, you'll get kind of a clearer view of what happened here. Here's our big breakout initially. We saw some profit taking. We saw some sellers interested right here. We pulled back. And if this were a really powerful breakout, what we would expect is a move higher. However, on the attempted retest, our previous structure high held and the sellers once again took over control. Not only did they push it back down to the previous retracement, but they pushed it past that previous retracement, putting in a lower low, lower close. So this formation right here is a simple one. It's called a double top, a retest of structure. And a conservative way to enter a double top is called a 2618, where the market puts in that double top. We then prove that the double top is valid by breaking the V point right here. And then for a 2618 opportunity, what you would be looking for is a retest in to our previous level of structure. Obviously, we can't violate these highs. If we do, then it's the whole setup is invalidated. But we look for a return into this level right here, and then look for another extension down, either retesting the previous lows or extending further lower. So keep an eye out for that on the euro dollar this week. Another busy news week. You got retail sales. We got FOMC minutes coming out. So the tide will change as the week goes on. But from a technical perspective right now, that looks like a pretty decent shorting opportunity. And keep in mind, overall, we are still in a very bearish trend. Next, we're going to take a look at the Aussie dollar. We're going to start on the daily chart. And we have an interesting setup here because there are 2 different types of trade opportunities. Well, I guess 2 of the same trading opportunities. They're both potential shorts, but they come at different areas of the chart. Now, first and foremost, I want to bring this to your attention. We looked at this all last week in the workshop, but we have a potential bearish cipher pattern forming here on the Aussie dollar. You'll see this on the New Zealand dollar as well. We're not going to look at it because they're basically identical. But if you're a Kiwi trader, you can look over there as well. But we have an X to A, our initial move right here. This is going to be called an anchor leg. A to B with our first retracement. This extension is going to be our C leg. And for the bearish cipher pattern, our decompletion starts at the 786 Fibonacci retracement, taken from A all the way to C. And it completes at the highs here of our X leg. So this is a zone where you can look for potential shorts. Obviously, if you're aggressive, you have that limit order right at the 786. If you're more conservative, if price action enters that zone, then you're looking for a reason for entry. So that's one thing to keep an eye on. And something that plays right into that, if we go down to the 4-hour, is going to be the loss of momentum pattern that we've seen here on the Aussie. And what I mean by a loss of momentum is that the slope in the trend has changed. A strong trend is going to have a very steep slope, right? Not a lot of candles to kind of take us higher. When we start ebbing and flowing and putting in a lot of candles but not gaining a lot of ground, that's called loss of momentum. And loss of momentum can come from, in this case, lack of buying interest. It can also come from some new selling interests, and in many cases, it's a combination of both. But typically when we see these type of patterns, whether they're in a strict channel type bouncing back and forth, or whether they're kind of, condensing like a wedge or some sort, we see a period of relief. And relief means that we see a little bit of a pullback in the trend. It doesn't mean a pullback all the way, but a little bit of relief from this area into the next key level of structure where the market needs to make up its decision. So the cool thing about this setup is we may have this rising channel or rising wedge, this loss of momentum pattern coming right into that cipher completion point, which would be good for cipher traders. So that's one short that's on the radar for this week. Another short is going to come at a much higher level because we've just put in a head and shoulders pattern. Actually, we can kind of combine both of these analysis. We just put in a head and shoulder pattern here. You can see left shoulder, retracement, extension down for the head, deep retracement, right, coming right symmetrical with our neckline right there, and then a little bit of a failed extension, which ends up being a retracement here for a right shoulder, and then we ended up breaking the neckline. I'll draw the neckline in for you. Here's your horizontal neckline if you're doing strictly horizontal support and resistance. If you're more of a trend line trader, it's pretty much the same, just going to be sloping a little bit. But typically what we would look for in this pattern is a breakout and a continuation higher. And where can we continue higher to? Well, there's a few ways we can measure methods. One would be if I just copy and paste the length of distance from the head to the shoulder, or to the neckline, I should say, a 1-to-1 measured move up here, AB equals CD pattern. We can bring on some Fibonacci's as well and look for some confluence. And of course, we can look left and see that structure leaves clues. It's going to put us right at our previous level of structure resistance, a major level of structure resistance. This would be an example of outside structure for you guys that remember that conversation from last week's workshop on inside versus outside structure, major versus minor structure. Now, the cool thing about this is, this is a shorting opportunity up here. This is a shorting opportunity in here. They're both within the cipher shorting opportunity as well, but the two may potentially work together, right? Remember that loss of momentum pattern that we talked about? Well, maybe that loss of momentum causes, right, or gives us the retracement that we're looking for back into the neckline. Then we can look to be continuation traders back up to the high. And then if you want to be really fancy, right, you can look to get short again if the market proves to hold at the highs and look for the next level of retracement back down. So a lot of cool things you could do here with the Aussie dollar. Obviously, you want to pick the ones that are within your trading plan, but more options, the better. So next up is the Euro Aussie, and this one's pretty simple. We are very extended on this pair. We are extended. We have broken out of a previous level of structure consolidation. And where have we broken out to? Well, look left, structure leaves clues right to a previous level of structure support. And I want you to think about it this way, right? If you are a seller who captured this breakout from the 45.50 level, where would you be looking to take profits at? Well, probably somewhere around this level. And if you're a seller looking to capture profits, you need buy orders to get those sell orders off the table and collect your profit. At the same time, if you are a buyer and you know the importance of support and resistance, where do you think the next level of buyers are interested at? Well, probably this level. Why? Because we've proven to be interested at this level before. Price spiked down. We tested twice, little tweezer bottoms right here, and then we shot back up. So you have sellers that are interested in buying. You have buyers that are interested in buying. This is a perfect area to look for a little bit of relief. If you're someone that uses, let's say, Bollinger Bands or indicators as well, you can see that we've closed outside. I have a 2 standard deviation band right here. We're probably closed outside the 2.5 as well. Not that this means too much to you, but basically it means that we are very overextended. Yep, even if I stretch it out, we're closing right at it. So very overextended in the market. You can see the stochastics is below the 20 as well. RSI hasn't gotten there yet, but we're seeing some pretty nice divergence here as well. All in all, decent level to look for a reversal. And again, when I say reversal, I don't mean a reversal meaning entirely, entire reversal in trend, but to look for a little bit of relief in the market and capture some profits in a counter trending type of way, back up to the previous level of structure in which we broke out from. Next up, New Zealand, Canada here on the 4-hour. And we've seen this pattern before, but want to bring it back up to you, right? Repetition is always good. But we have, let's see if you can guess it before I say it. Dun, 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 right? Pause the tape if you need to. A rising wedge, right? A rising wedge right here. And again, this is a loss of momentum pattern, right? Big breakout to the upside and then kind of a squiggly wiggly stuff. Now, the reason I bring this up because this is another one that is at a previous level of structure. Now, for me, here's what's important. You can choose to trade however you want, right? I love these patterns, right? I love classical chart patterns. I love reading the market, but it's not the what, it's the where that is more important for me. So it's not as much the pattern, the rising wedge, the falling channel, the double top, the double bottom. Those are important, but they're only as important as where they're located in the chart. Because if you see these things at levels that you don't actually think price is likely to reverse at, it makes it a much lower probability trading opportunity. So something I like about this one, again, we got nice divergence here on the RSI as well. I don't have it, kind of have it miniaturized, or minimized, but here you go. Something I like about this is it's right at a previous level of structure. Based off the conversation we had on the previous chart, right? A good level to look for some relief. Next up is the dollar index, the DXY. This is going to be very similar to the euro dollar, as the DXY is essentially the euro dollar. But nice fight off of previous structure here. You can see, right, we had previous level of structure resistance. Resistance violated that to the upside and put in a nice little pullback here. Sorry, wrong tool. Put in a nice little pullback and really held off this previous level of structure so far pretty well. You can see the strong momentum bearish candle came down. We found some buying pressure, had a nice little inside bar right here, consolidation, and then we ended the week with a higher high, higher close, so some bullish strength. If we go down to a 4-hour chart, we're going to get that double bottom. And again, this is an opportunity to look for a potential 26.18. So for price action to come back down to this level one more time, see if the bulls can protect it and look for a move up, either retesting our previous pivot point right here, or retesting a higher level of structure up there. You could make the play for a trend continuation here as well if you want to keep a partial profit on them. I'm not too sold with that, just because on the weekly, we haven't violated, right? If we look left, we haven't violated this little previous level of structure right here. So there's nothing that I can predict that says we're likely to go continue higher until we break that level. But I'm very conservative in my trading. If you're someone that's more aggressive, maybe make a play for that break as well. Again, it is going to be a heavy fundamental week. If you've done your fundamental research and you happen to see that, hey, your technical analysis lines up with your fundamental analysis, that's how we look for these quote unquote home run trades. Keep a partial on and see if you can play for that break on Wednesday with the FOMC. All right, GER30, the DAX here. We're going to start on the weekly chart again, just to show you some perspective. We got a few things here, right? Notice this nice level of previous structure support. Price came down, spiked in that level, came down. Look how we fought this off a few weeks ago, or a few months ago, I should say, right? Two very nice pin bars there. Yes, if you remember the analysis, or if you've just seen it with your eyes, this was also a Gartley pattern down here as well, which actually brings up a pretty good conversation. You're going to see it better on the daily. I was talking with Trader Nick from A1 Trader the other day. We did this nice interview. I'll put it on my YouTube channel under kind of special playlists or whatever. It has special events. But we were talking about, he mentioned that one of the things he's hearing a lot is, I guess, a trendy thing he's hearing is about people being stop hunted. And we had a conversation about, is stop hunting a real thing or is it a myth? The answer is it's a myth. It's not a real thing. Your broker can care less about you, right? You're not that important. But I think the problem is that people are just putting their stop losses in poor locations. And this was a great example of that, right? You have this nice advanced pattern formation right here. Actually, maybe it may have been a bat. Forgive me. It was a bat or a shallow Gartley. I forgot. This was a while ago. Yeah, okay. Yeah, I was right the first time. Gartley right here. And the stop loss for the Gartley pattern needs to be below the X leg, right? Your X leg is going to be this little bad boy right here. Now, when we say below, we don't mean right below, because this is the most obvious place in the world. And if I am an institution, if I am someone who is looking to hunt stops, I know that most retail traders, and let's be honest, most retail traders aren't the smartest, the sharpest out there, right? They're going to put their stop loss right below this level because it's right below. So price will come down. It will poke and poach those stop losses before it runs up. So you got to be smarter with where you put your stop loss. That's a good example right there. Going back to the technicals, I think we have room to continue higher. We have not yet achieved the secondary target here for our Gartley. We're a little bit higher there, but I think we can come back and retest our previous structure highs right here. I don't see anything in the way of stopping it. So again, we have a higher high, higher close on the daily for the week. On the 4 hour, right, you're going to see lots of opportunities for potential pullback and continuation up to that level. So a nice bullish continuation trade here on the DAX. Now, before we end things, do me a favor, make sure you hit that like button, subscribe if you are new. It's pretty cool to see how many of you guys have been following this video for so many years, even before I was with Tier 1 Trading, and it's cool to see that this has kind of been part of your routine and preparing for the week ahead by kind of seeing what's on my radar, taking notes, and then kind of knowing what to track for the rest of the week. So I love doing this free video. It was something that my mentor did, and it helped me a lot during my trading journey. So as I kind of took over the coaching and mentor reins from him, it's something that I wanted to continue doing, and just so happy to see that you guys are getting so much out of it. So just do me a favor, the best way you can support is by hitting that like button, subscribing if you're new, and of course sharing this on social media. That way we can attract more and more people to this channel and to this show. But we'll keep it nice and simple for the last one. We're on the footsie here. This is just a reminder. You can see notes are already on the chart. We got the bearish bat at previous level of structure. Nothing has changed. We're just inching closer to it. So put it back on your radar if you did not see it. All right. I'll see you guys with the live streams during the week, and I'll see you guys with new episodes of the Trading Coach Podcast Monday, Wednesday, and Friday.